Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to a Sunday live stream. Hope everybody's having a great weekend. Now today, I'm going to be talking about gold and gold purchases, specifically gold purchases abroad, around the world, because on Wednesday, the Russian Finance Ministry made a very interesting announcement, and that is that they are going to be boosting their purchases of gold from the period September 6th to October 4th to the tune of 8.2 billion rubles per day. Now, why is that significant? Well, it represents an increase of about 700% over the previous period. So Russia is beginning to expand their gold purchases in a very big way. And that is indicative of a trend that we have been witnessing for years now, which has driven the price of gold to record all-time highs. And when we examine this announcement, as well as some other news surrounding the BRICS nations and gold purchases that we received this week, it becomes clear that that trend is not going to stop anytime soon. But, you know, one thing that we've witnessed in the gold price over the past several trading sessions is following a breakout to record all-time highs above $2,500. It's been a little constrained by concerns about recession in the U.S. and worldwide. And I want to talk about that today as well, and how that scenario could play out, and why we might get one more opportunity to buy some discounted gold in the near future, and why I would be buying that dip aggressively. So we're going to delve into quite a bit in today's video. I see some familiar faces in the chat there. Welcome. Do me a favor, smash the like button, subscribe to the channel if you haven't done that yet. And let's say a thank you to today's video sponsor, sdbullion.com. If you want to take a page out of the Russian ministry's playbook and increase your gold purchases, SD Bullion is where I buy my gold. Right now, they got a great sale on American gold buffalo coins. Let me know in the chat if you like gold buffaloes. I think they're a really nice coin. That's a 24-karat gold coin, 4 nines fine, 1 ounce of gold. And right now you can get one for just $70 over spot, a very low premium, especially in percentage terms, as gold is sitting, again, near record all-time highs. So let's take a look at the chart of gold before we get into some of the additional news and what's been going on with gold. So gold has been a very hot market. It's up over 20% year to date. You can see this is a weekly chart, so each one of these candles represents 1 week. It has been under a little bit of pressure lately. Very little, I guess you might say, considering how well it's performed this year in totality. But, you know, we haven't seen the big breakout following gold's rise above $2,500. I mean, that's a very psychologically important level. I was thinking that once we got gold above $2,500, it would be off to the races. But what has happened instead is we've seen gold trending sideways for the past 3 weeks following that breakout. And then on Friday, had a little bit of a decline. It's back under $2,500. What is driving that? Why is the gold price declining? And what does that mean? Well, really what is at play here is the fear of a major U.S. recession. And certainly some of the economic data seems to support that view. The weak jobs numbers that we've received, which are probably, you know, artificially high anyway, but even taken at their face, the official numbers are not painting the greatest picture. So if there's a recession in the U.S., what's going to happen to the price of silver? What's going to happen to the price of gold? What's going to happen if the stock market has a major correction? Well, in all likelihood, it's going to fall. But how far will gold really fall? Let's zoom out a little bit. So gold recently, on its way to hitting record all-time highs this year, earlier this year, broke out of this major cup and handle formation, which goes all the way back to the 2011 highs. And this breakout is very significant. If just from a technical standpoint, this breakout should send gold to $3,000 plus. But one thing gold hasn't done yet is retest this line that it broke out from. And in a breakout from a cup and handle, it's not unusual to see a retest of this line before going on to hit, you know, new major highs. So in the event that we do get a major recession in the US, I'm thinking gold isn't going to fall any lower than this line, which would be put the decline around 2200 bucks. Now, that is perhaps a significant decline from where we're at today, but think about it this way, even if it were to happen, we'd still be up for the year. And I think there's a lot of evidence to indicate that any drop on the backs of a major stock market sell-off, on the backs of a major recession, will be met with a huge amount of buying. Now, let's examine the case for that and why gold likely has a very, very bright future, even if we do get a major drop on a recession. So this is a story from Nikkei Asia from last week regarding gold buying in India, one of the biggest gold consumers worldwide. So the Indian central bank is, I believe, the number one consumer in Q2 of 2024. They bought more gold than any other central bank. And now it's looking like the Indian populace at large may begin to buy more and more gold because there was just a major change to Indian tax laws. The tariffs on importing gold was dropped from 15% to 6% in July. So anybody in India who is buying gold that was imported from abroad is going to be paying 9% less than they would have before this change in tariffs. So that is going to spur demand there. And India is the world's most populous nation. They surpassed China, I think, last year. And they have a long history of stacking gold. So we're going to see a lot of demand, not only from Russia increasing their purchases, but also the other BRICS nations, India being one of those, being the most populous member of BRICS. They are likely to see an increase in gold demand. And it's not just Russia and India. That's the thing. That is the important thing here. There is a global move into gold as a safe haven asset, as sanctions have exploded, as trade wars have exploded. Nations around the world are looking for safe havens that they can put their wealth into without counterparty risk. And it's in large part the same reason that individuals stack gold. You can't wake up tomorrow and find that your gold has been bailed in by the bank or been cut off by sanctions in the case of a nation state. If you have it in your possession, it's yours. And in India, likely a lot of consumers understand that, and they're going to be buying more gold. Now, there's been also, a lot of talk about a BRICS gold-backed currency possibly in the works. Now, we haven't seen any concrete manifestation of that yet. There was a lot of speculation that we might see that at last year's BRICS conference in August. Well, this year's is going to be held in Russia in October. So very interesting that leading up to that meeting, they have increased their gold purchases by 700%. But we might get some kind of an announcement, some kind of information regarding a BRICS currency, gold-backed or not, in October, something to potentially rival the dollar. Now, I don't think the dollar is going anywhere anytime soon as the global reserve currency, barring some major black swan event, but the foundation for alternatives is being laid, and a lot of that has to do with gold. But in the U.S., we actually have gold circulating currencies. If you're not familiar with goldbacks, you can check them out at goldback.com, as gold has been hitting record all-time highs. So have these things, and this is actually a gold-backed currency that circulates in the U.S. in 5 states. If you're not familiar with it, it's pretty interesting. You can check it out at goldback.com. But the other major BRICS member that has been involved in the gold market recently is China. China is the biggest gold producer in the world. They're also one of the biggest importers. And in 2023, last year, according to the World Gold Council, China was the number one purchaser of gold. And they bought a lot in Q1 of 2024 also. But officially, according to the PBOC, they have halted their gold purchases for the past 4 months. So for Q2 and now, the 4th month in August, they did not add to their official gold holdings. Now, one of the reasons that has been speculated that the PBOC has halted these purchases is because gold has been knocking out record high after record high after record high, and they may be waiting for some kind of a pullback. They don't want to buy at the top of the market. And, Bloomberg says here, the halt in buying by the PBOC adds to signs that soaring prices are crimping global central bank demand. Of course, in Q2, there were record purchases for a second quarter of the year by central banks. China just sat on the sidelines. But there's two things I want to mention here. First is that if you do see a decline in the gold price, on a U.S. recession, maybe down to $2,100, $2,200, that is going to be met by a huge amount of buying by the People's Bank of China, by just the population in India in general, by people around the world, even in the U.S. If you saw gold drop to $2,200 tomorrow, put a 1 in the chat if you would go out and stack some. I know I would. I would love a pullback like that, actually. I mean, as a net buyer of gold, gold has gotten pricey. I have still been stacking it, but I would love to stack some more at lower prices. And I'm sure the People's Bank of China feels the same way. But also, there is the potential that the People's Bank of China has been buying gold behind the scenes. Now, when it was first announced that China had halted gold purchases in April of this year, the gold price actually put a pretty big decline on that news. It catalyzed a sell-off in the price of gold. Since that time, gold has basically ignored all the subsequent months that China has stopped their purchases. So, one thing you can think here is that if China announces that they're getting back into the gold market, that would likely put significant upward pressure on the price of gold. You can basically, I think, guarantee that should the price come under some strong correction, the PBOC is going to be buying more. And so that's going to put a floor under the price of gold. That's why I would be looking to stack any decline. But also, there's the possibility here that China may be buying gold and simply not announcing it, right? That would not be without precedent. If we go back to 2015, this is a story from the Wall Street Journal. It's titled, China Discloses Its Gold Holdings. And at the end of June 2015, China's gold holdings totaled 53.32 million troy ounces. That was what they announced. That was up 57% from April 2009. And that was the last time that the People's Bank of China had reported its reserves. So for 6 whole years, China was stacking large quantities of gold. In fact, they more than, almost a quarter, 57%, a big increase is what they witnessed. And they didn't announce any purchases that whole time. And then in one lump sum, they announced it. So there is the possibility that China is stacking gold here behind the scenes and simply not letting the world know. And if that's the case, if it turns out that China has been buying gold all along, if they announce it in one lump sum, that too could put significant upward pressure. And it is notable that, China announced that they were halting gold purchases back in April. And yet during that time period, since then, we've seen the gold price rise substantially. So there is some indication here that China's buying may not have stopped, right? And, they don't have to necessarily, there's lots of ways for them to obfuscate this, right? They can buy it through other entities. They can simply, hoard their own domestic gold production, which they are the biggest gold producers in the world, I think followed by Russia. So, the BRICS, in terms of gold, they're major producers. And on top of that, they're major purchasers and importers. Justin Aldridge says, are they using U.S. dollars to purchase this gold? Well, I don't believe they released the information regarding how they specifically buy this gold. There is the possibility that they are, using some of their U.S. dollar holdings to buy gold. It's also possible that they're using the Chinese yuan, especially for domestic gold purchases, or perhaps gold purchases from other BRICS nations. They're trying to avoid using the U.S. dollar in their bilateral trade. So I don't necessarily know what currency they are using to buy the gold, but some combination. They have been selling their U.S. dollar denominated debt holdings. China has been liquidating its treasury holdings, of which they are the second largest holder worldwide. at a record pace, and it's possible that they've been converting some of the proceeds of that into gold. And, that's another scenario in which you could see a major rise in the price of gold if, say, China were to decide to liquidate a significant portion of their treasury holdings, perhaps out of a fear of having, that money frozen, by sanctions, which are being threatened against China right now as we speak because of their alleged funding of Russia's war in Ukraine. So, there is some incentive there for them to try to get out of U.S. dollars and into gold, and that is a big driver of these gold purchases. But yeah, it doesn't really matter what they buy it with because it's going to diminish the supply of gold and hence drive up the dollar denominated price. Of course, at the Shanghai Gold Exchange, where gold is denominated in the Chinese yuan, gold trades at a significant premium to Western exchanges, and that too is potentially a driver for gold to flow from west to east, to flow from bullion warehouses in the west to places like the Shanghai Gold Exchange. And so basically with the BRICS nations, with China, Russia, India, many of these nations, whatever you want to call them, global South BRICS, they are accumulating large quantities of gold, and that is likely going to drive the price much higher. The trend is up. If you just look from a technical standpoint, we should at some point, following this breakout from this cup and handle, see $3,000 gold. Fundamentals tend to support that. I think any decline in the price of gold will be met with major demand from the U.S. domestically, from the BRICS nations around the world. Everybody has got the memo now, I think, that gold is a good thing to have. And anyway, that's pretty much it for today's live stream, everybody. I hope you enjoyed it. I hope you got something useful out of this information. If you did, do me a favor, smash that like button, share the video on social media. You can also follow me over at x.com/stacksmarter, and I will catch you next time. Thanks for watching, everybody. Stay